Hey, how you doing? This is Aaron Henson with Luna Lending. I thought I'd make a little video here to talk about something that I see quite a bit in my particular line of work, and that's what are points. A lot of people ask, what are points? How do they work? And it's really quite simple. And the reason that I think it's very important to understand this is that there's a very big difference between getting a bona fide mortgage quote, which will break down the interest rate, the payments, and then all costs that are associated with the loan. Points being one of the costs associated with the loan. That's a bona fide quote. Any lender that discloses those loan terms is required to stand by them. You need to actually speak with the loan officer, get a real quote. It's not the numbers that you see flashing all over the internet. It's not the thing with the little rocket ship as a quickie or whoever. It's not those rates you see on TV. Those are not real. They're fictitious, and that's marketing, unfortunately. And you really can't read it, but there's all that small print at the bottom. Usually, what they do for marketing, because you want your phone to ring, you want to get the emails, you want to get in front of as many people as you can, so you're going to market and advertise the lowest possible rate. It may have 2 points on it. There's a million disclaimers. So you see, oh, 2.75, 2%. There's a lot of strings attached, and one of those many ones are points. Sometimes they do make sense. More often than not, they don't. Just like a lot of things with mortgages, not always a right or wrong. It's a decision that everyone would make. But I thought I'd take a quick minute here and explain to you what exactly is a point. So in this case, let's say you go out and you find, and by the way, this is not a quote or an estimate. I mean, this is not like an official quote of any rates or anything. These are just budgetary figures to give you a nice idea on how a point works. So let's say you go out, got your awesome realtor, you look at a bunch of houses, find a beautiful home, and that home costs $400,000. In this case, let's say you saved up a 20% down payment. So that means that your loan amount is going to be for $320,000. That's 80% of 400,000. Let's say the normal par rate, if you had good credit, it would be right about 3.75 today. I always start with the par rate. I don't quote a rate with points unless you ask for it. Just think it's kind of shafty. But yeah, 3.75 would be the par rate, is what we call that, with no points. So you would always have the option. We call that buying down your rate. Let's say you paid 1 point and you were able to obtain a rate of 3.5. Now, for bragging rights, yeah, 3.5 is better than 3.75. Everybody knows that. But how much? Not as much as you would think. Your payment between 3.75 and 3.5 is going to be $45 less a month. 1 point is equal to 1% of the loan amount. So $3,200 would be the increase in cost. So you would bring, in this case, $3,200 more to closing in order to save $45 a month. What we often look at, and what I'll calculate for clients, is what's the break-even points on that. Of course, $45 over 30 years is quite a bit of money, but most folks aren't looking that far ahead. Usually you want to break even in a few years. And by break even, I mean if you took that $45 and you put it into a separate side account every single month, how long would it take you to make your $3,200 back? And then after that, from that break-even point on, now you're profitable. You're actually, in the red, which is good. So it's 71 months. 45 times 71 is 30. It's just under $3,200. So 6 years to make that money back. So is it worth it? That's up to you. That's the idea of how a point works. Never hurts to ask your loan officer, should I pay points? Should I do a buy down? Sometimes on really big loans it makes sense. And, sometimes there's different ways. Now you can buy down more than a quarter. This is just, one example. But a point is a percentage of the loan amount, not the home purchase price, the actual amount that you're borrowing, to obtain a lower rate so that you make it back over time. Should always ask what your break-even point is. How long will it take me to make it back? If it's 2 or 3 years, maybe it's a good move. If it's 7 years, you might get transferred, you might move. Any number of things can happen, so it's really up to you to decide. So I hope this information is helpful. Remember, you can give me a call anytime if you have ever had any questions about anything real estate related. Thanks a lot. Have a great day.